Makers, we are back with another analysis to kickstart our Thursday's trading. Okay, as expected, as mentioned yesterday night, early morning at 2 a.m. today, we saw that the Fed is extremely hawkish in terms of interest rates. They are very wary of the fact that possible near-term inflation, possible short-term inflation will definitely be affecting the market. And that is why they are very, very cautious in terms of cutting rates. They are signaling fewer rate cuts ahead, and they are acknowledging that rising inflation risk from energy prices is the factor. Okay, and with that, we are seeing huge reactions in terms of prices of gold, and we should see a continuation lower. Okay, but not discounting the fact that a pullback is required. Okay, a pullback is definitely required in any market for it to properly move, and we are open to scalping buys and riding sells. Okay, we are definitely open in scalping buys and riding sells. With that, furthermore, we are seeing that the US dollar remains the preferred safe haven asset in this time of war, with expectation that continued conflict and higher energy prices will definitely keep the demand for the US dollar very, very strong. This is a limitation towards any sustained upside in terms of gold. Okay. With that, let's quickly dive into this multi-time frame analysis. But before I kick things off, I just want to say, because this is something I've been watching on social media a lot, and this is something I want to say, that a lot of gurus out there is saying that this kind of bearish movement is manipulation on gold prices. Gold might institutions are pushing down prices to take buyers out before actually pumping gold, but that's technically not very true. Any form of manipulation would be short-term. This is long-term movement, okay? That is just not true, economically not true, okay? They do not understand that as of now, safe haven demand is pushing towards the US dollar because of energy prices, because of the rising cost of energy prices. That is one thing to take note of. Secondly, increase in energy prices will trickle down, will have a trickle down effect into inflation, because everything we use today, one way or another, requires oil. Okay, requires oil. The laptop that you're using requires oil to build, requires oil to transport it into your home, for you to actually use it for the delivery. Okay, so everything requires oil, and if oil prices increases, everything will increase as followed. Okay, and when inflation increases, that's the basics of economy. When inflation increases, interest rates will then remain elevated, okay, to try and lower down inflation. And when interest rates are elevated, demand for the US dollar increases again, and that is why we see a continued spiral, multi-day spiral of bearish gold. Okay. With that, this is not an economic lesson. I'm not talking about economics here. I just want to talk about price action and the overview that I believe we should see on gold today. So, closing below on the daily, closing below on the protected low on the daily is a very, very bearish sign, especially after FOMC, meaning that the price action of gold is aligned with fundamentals at the moment. Okay, so that being aligned, bearishness being aligned, we should see continued bearish movement. Okay, moving into the 4-hour, this is the 4-hour time frame. We have a resting fair value up here, which I expect technically, all right, if you look at the grand scheme of things, I do expect levels to retrace into that level, because this is a huge amount of imbalance formed during NYPM session. Okay, so London, there is a good chance that price will just consolidate upwards, at least into the 50% level right here, marked out here, of the whole move. Okay, from this high to this low, this is the 50% mark. I am expecting price to slowly consolidate on the lower time frames into that level before pushing lower. Okay, that is what I'm expecting. That is one of my bias as well for today. A slow climb upwards before bearish volume coming in. This would be a trap as well to trap retail traders as well. Just consecutive bullish movement, sweeping the highs before pushing lower. Now we're on the 1 hour. This is a fair value gap right here. I am expecting the fair value gap to be traded into again before the actual move. So as of now, even though the trend is bearish, very, very strong bearish trend, I kind of want to take buys, okay? I kind of want to take some scalping buys, okay? Now, this might be crazy to some of you, but just hear me out for the moment, because let's go into the 15 minutes so you guys can see things much clearer. In the 15-minute time frame, we did form an external change of character with this bullish candle closure on the 15-minute time frame, showing committed buyers, okay? Committed buyers. We are now retesting the OB, the order block right here. We have the Asian high and the Asian low. We are sort of in the middle of the Asian range. And as of now, if volume remains low, okay, this is consolidated volume, internal movement, okay, internal higher highs and higher lows, higher highs, higher lows, lower high, lower low, okay? So this is all internal movement, but what if internal movement continues to climb, okay, until we reach the 50% mark of the fib, and then we start to go down, okay, start to align with long-term trend. I'm not saying this will happen, I'm just saying I'm open to taking moves like that, okay? I'm open to taking moves like that, but we do need lower time frame confirmation, okay? So what are the expected moves for today? Move one, scenario one, we align ourselves with the trend, okay? We align ourselves with the higher highs, higher lows, higher highs, higher lows, higher high, higher lows trend of the 15-minute time frame. Look for confirmation, take buys into what's the Asian high, and completely fill the hourly fair value gap. And if we close above it, we might take some continuation buys into the 1 hour high, or even into the 50% of the fib, okay? This is scenario one, straight line buys. Scenario two would be a reversal setup, a run in towards the Asian high before we take sells in towards the Asian low. This is scenario two, okay? Scenario three is after scenario, I think scenario 1B would be after this move right here, we then get a confirmation sell on either this 50% mark with a change of character, or this hourly high, or even at the hourly fair value gap, okay? So either we take reversal sells or we take buys. But this will all depend on the lower time frame to see what kind of movement we have, so we will be getting, okay? If bullish volume remains strong, we will then take buys. If not, we will then take sells. We might be able to take some risky buys into the Asian high first, and after that, we will then look to take sells, okay? With that, let's all have a very, very profitable day ahead. There are many opportunities in the market as of now. Let's just try and focus to capture as much as possible, okay? With that, I hope all of you have a very, very profitable day.